Welcome to the Leafy podcast, helping real estate investors and entrepreneurs grow. Say hello to your hosts, Jennifer Glagoric and Brian Price, founders of Leafy Legal Services, teaching you how to protect your assets, grow your business, and manage your wealth. Let's start the show.
Hi, everyone. Welcome to Leafy Podcast. Thank you so much for being here today. We have another amazing guest for you today. So I'll go ahead and introduce our host. We've got Jennifer and Brian on the line today. They are both from Leafy Legal Services, and I'll go ahead and hand it over to them now to get started.
Well, our guest today is a lawyer, but he does not do lawyering stuff. Since 2006, he has been helping people in the self-directed business. So you guys have known we talk a lot about that, and now we have an expert who's been doing it for quite some time. So here to talk to us today about self-directed IRAs, we have the wonderful Scott Maurer. So Scott, please say hi to our Leafy people.
Hi, Leafy audience. Jennifer, Brian, thanks for having me on today.
Awesome. Yeah. Thanks for being here, Scott. So how did you go from being a lawyer to get into the self-directed IRA? It's not necessarily probably what we hear that often, but kind of be interested in your story and how you kind of got into it and why you decided to get into it.
Yeah, no problem. That's a great question. So the owner of Advanta IRA, which is the self-directed company I work for, he's also an attorney by degree and was a certified financial planner. He got into the self-directed business on the financial planning angle. Back in the late 90s and ended up founding our company in 2004. And about that time when the real estate market was taking off, we started growing, and I was brought in when they were looking to hire new employees to help grow and go even further. That's where I came into being. I hooked up with Jack because I was an attorney as well. And I think that was interesting and enticing to him. That's how I got involved in it. I never really wanted to be a quote lawyer, so to speak, in the courtroom or whatnot. It was not my goal in going to law school was more about the education and opening some doors, which it did, obviously, and I've been very happy here over the last almost 15 years now.
Wow.
And so you're with Advanta IRA. So we talk a lot about the power of having checkbook control and being able to be your own bank. So most of the times we talk about solo 401ks, but I would really like to focus on IRAs because that doesn't get talked about enough. So the difference between a solo 401k and an SDIRA is a solo 401k, you have to be self-employed. It will cover you and a spouse. You can't have any employees. But let's talk about the SDIRA. When should someone consider getting an SDIRA, and what are the differences that we're looking as far as contribution limits?
Sure, that's a great question. A lot in that question too. I'll try to do it.
Just talk.
So, I think the solo 401k is probably the preferred investment vehicle for anyone who's self-directing. Now, that being said, not everyone qualifies for a self-directed solo 401k. So you have to have a solo 401k plan, you need to be self-employed. Right. You can't have any employees who would qualify to be included under the plan. That defeats the whole solo 401k premise. And you really need to have a legitimate business or enterprise, that you're drawing a salary from or some type of compensation from in order to start that type of an account. The main difference between a solo 401k and an IRA off the bat is the contribution limits. So if you are self-employed and you don't have the employees and you qualify for a solo 401k, you can contribute up to $56,000 a year into that solo 401k plan, whereby with a regular IRA account, you're limited to $6,000 or $7,000 a year. So that's a huge, like I said, point right off the bat that you can contribute so much more into a solo 401k. Also, with a solo 401k, I'm not sure if we want to get into it or not. It's a little bit of a complicated issue, but
I do want to stop you on that. The limit for 2020 is actually $57,000 for a solo 401k with a $6,500 catch-up.
That is correct. Yeah. So and that component, there's $19,000 or $19,500 of salary deferral. Right. So you do it. So again, for the solo 401k, you have to be taking a salary. We do talk to individuals who say, "Oh, I'm in the real estate business," but all of the income that they're generating is passive. So in order to really, again, make that full salary contribution, you have to take a salary and then pay self-employment taxes on part of that income to then enable you to defer that into the solo plan.
Right. Yeah, no. So let's talk about the SDIRA. So you said the limit for that is 6,500?
It's 6,000 if you're under 50. It's 7,000 if you're over 50. That number went up in 2019. Usually it takes about 3 or 4 years, and then it'll probably increase another $500 or so. But right now it's 6,000 or 7,000 if you're over 50. Now that account is for anyone. If you're a W-2 employee, even if you have a 401k through your employer, you can still contribute up to that $6,000 or $7,000 mark. Now, one other thing to mention when we talk about a self-directed IRA, you have self-directed traditional IRAs that are tax-deferred entities. You have self-directed Roth IRAs, which are the tax-free IRA accounts. So there are a couple of different kinds, and the contributions to one may limit how much you can contribute to the other. But they all offer tax-deferred growth, the difference being that a Roth IRA is ultimately coming out completely tax-free. That's why it's such a special and great account that the government actually gave us back in the mid to late 90s. Also, though, if the solo 401k sounds good, you say, hey, I like that tax-free option, that Roth sounds better. It is possible to also have a Roth component of your solo 401k plan. So if you're self-employed, you don't have to give up on the Roth IRA, because you can certainly encompass that and incorporate that into your Roth 401k.
Right. And on an SDIRA, what are you allowed to roll in your own account? So let's say you want to roll in a traditional, another IRA you have, and you want it to roll into your SDIRA. Are you allowed to do it? And if so, what are the limits for that?
You can. So it's a good thing to mention that a lot of people will say, I don't have a self-directed IRA, or what do you mean by self-directed? Self-directed refers simply to your ability to invest in alternative assets in your account. So a self-directed IRA is not an IRA that the IRS recognizes. They recognize traditional Roths or SEPs or Simples if you're self-employed, or again, maybe the solo K. So the self-directed IRA simply means you're being able to invest in what you choose, not what you're being limited to by your custodian. So if you do have a traditional IRA or a Roth IRA with a Wells Fargo, the Charles Schwab, or the Fidelity, you can simply transfer that money into an account with us, and it's then in turn going to be self-directed. So again, it's not a matter of the self-directed being a special type of an account. It's just, it's the IRS, we have traditional IRAs, Roth, SEPs, they're all self-directed. You're choosing what you want to invest in.
Yeah, awesome. So one of the things I was looking at your website is, you have like the real estate IRA, you have the normal self-directed IRA, normal mutual funds, but I also saw in there you had something about cryptocurrency. And, with cryptocurrency kind of becoming a bigger and bigger thing, are you seeing more people getting into that with their IRAs, or?
Yeah, not so much now. I mean, it was, a couple of years ago with the craze that was going on. That was where we saw a lot more investing in there. We still see some people trickling in here and there that want to invest in crypto.
Okay.
The key thing, I think, and crypto is a good example of this. The only things you cannot invest in with your IRA are either life insurance or collectibles. And collectibles include artwork, antiques, vintage wines, things of that nature. But cryptocurrency is not deemed a collectible. So whether it's crypto or real estate or multifamily real estate, private lending, you name it, as long as it's not life insurance or collectible, you can invest in it.
Yeah, I think it's important that people understand it's not just, they don't have to just do paper or just assets. They can mix and match too. I think it's pretty cool to be able to do that. And then it kind of allows your retirement to be kind of a mix of different things you may be interested in.
Yeah, I mean, I think that brings up a point. I think a reason why a lot of our clients look to self-direction is, you hear people talk about, or financial advisors talk about diversification within your portfolio. And to them, diversification means picking amongst the different types of mutual funds, when it really means to us is that you're diversifying among completely different asset classes, whether it's mutual funds, publicly traded stocks, private stocks, real estate, or crypto. You're putting your money out, where you feel most comfortable having that money invested.
Yeah, absolutely.
Are you seeing any other kind of assets that are being invested in outside of the normal ones we're seeing in crypto, or?
No, I mean, I think over the last few years, the biggest uptick we've seen has been in multifamily real estate investing. Has been, I think, kind of a new wave of at least the real estate community. But of course, if you talk about real estate investing as a concept, that means so much to so many different people. That could be, I'm a real estate investor. I buy single family buy and hold, or I flip properties. Now it's encompassing and meaning people who invest passively in multifamily real estate, but it could be private lenders. Tax liens is one area we've seen a lot of people try to take advantage of, maybe not having as much in their IRA account to work with to maybe buy their own home or their own property. Within the IRA, they can still get involved self-directing through a tax lien or a tax deed sale. So those are, again, as long as it's not life insurance or collectibles, we can hold it, or you can do that inside of a self-directed IRA.
Cool.
So talk a little bit more about that. People are like, well, what do you mean you can buy something? Because that we often get asked that too. So, well, what do you mean? Doesn't it just stay there for like ever? And you're like, no, self-direct is a completely different animal. So talk a little bit about that, of what you mean using your own money in an SDIRA.
Sure. So individuals who have money in either in an IRA or maybe an old 401k or an old 403b plan, kind of conditioned to think that that money is going to sit at the Schwab account or at that Wells Fargo account, just earning interest over the lifetime. Again, what those brokerage firms, those companies are not telling you is that you have other investment options. So with an IRA or with an old 401k, your goal is to have, you have that money now, you're going to use that money when you retire, and you want to have as much there as possible. And it's what mechanism, what investments are going to get you there, what's going to get you to that curve and really growing your money much more quickly. And again, most people don't realize that they could use their IRA, which is its own separate legal entity, to go buy a rental property, to go buy a rehab project, or to go buy into multifamily, and have that actually be the investment in their account. I think a good kind of a visual illustration for me is if you're used to getting your Wells Fargo statement that lists your 4 or 5 different mutual funds that you hold, you're going to get a statement instead from Advanta that shows you own 123 Main Street, or that you've lent $50,000 to John Smith, secured by some real estate. That's what you're going to show on your account statement with Advanta or with the self-directed IRA. That's the actual investment, and all of the income that you receive from that investment flows back to your IRA, and any expense associated gets paid out. Just like if you have a mutual fund now, or a private stock or a stock, and that stock or mutual fund has a dividend, it gets paid back into your IRA, and that's how your IRA account grows. With real estate and these alternative assets, it's whatever income stream is coming from that particular investment is feeding and growing your retirement account.
Yeah, I think that that's important to note, that you want your money, we talk about this all the time, make your money work for you. And I stole it from Chris Noggle. I will give him credit. He said, don't let your money, and I've used this so many times. I was like, I always say, actually, it's not me, I stole it from someone else. But I always say, don't let your money sit on the couch eating Cheetos, watching your TV, being a bum. Make your money work for you. Your money's got get it to work too. And there are ways to do that. And a self-directed account is one of them. Why do you think, what are some of the best questions you get when people come to you of why should I do this? What are your initial responses when it comes to SDIRAs?
Yeah, I think the reason why someone should consider, and by no means think that everyone out there should have a self-directed IRA account. It really depends on your personality and you as an individual. If you are, someone who doesn't take an active role in your finances, you're not someone who wants to pay attention to an investment, you want to just put your money, sit and forget it and walk away, this maybe isn't for you. But for the people who say, why should I self-direct? No one's going to look after their money better than you will, or you should. So in reality, most people probably should be paying much more attention to their IRAs and 401ks than they do. So why should you self-direct? Because if you find opportunities, or you feel like you can do better than the stock market, or you want to be able to sleep at night, which is another thing we hear from a lot of individuals, I'm just not comfortable with the stock market. I'm not comfortable putting my money with Wall Street right now. I can buy a house down the street in my neighborhood. It's going to rent for $2,000 a month. And that's a better income stream to me, or at least a more consistent, more reliable income stream to me. So I think, again, why self-directing is simply if you want to be in control and you want to be able to sleep at night and you want to be able to pick your investments, that's really why someone should consider. But again, if you're someone who just wants to put $1,000 a month into your account as a contribution or what have you, and just sit it and let somebody else worry about it and never deal with it, maybe self-direction isn't for you. But for a lot of the people, obviously, that we talk to and that are probably listening to the podcast, they are taking a more active role. So self-directed IRAs are giving you that extra capital that you may need for your next deal. And again, a way for you to boost your own retirement account through your knowledge of real estate investing.
Yeah, I don't agree. Yeah, don't do that. Don't just let your money sit anywhere. Be looking at it, like pay attention to your bills, pay attention to your, your light bill. Now with deregulation, I mean, it's amazing, if you just keep the same company year after year, how you can get messed up with that. So you need to make periodic checks on all the bills that you paid. I just found that out with my phone. So I'm paying like this ridiculous amount. I've had the same company. I'll just tell you my little story here. Same company for 13 years I've had my phone with. And I just got this really chatty person where I have my my cable, right? So I have business internet and all this other stuff through them. And I'm like, man, if you guys could just take over, what's this thing about your new phone? And he was like, yeah, it's the same network. So it was the same network that I've kept for 13 years because they are reliable. I'd never drop a call. I do a lot of traveling. I've been in the middle of the Gulf of Mexico on a cruise still on my phone, right? So I need reliability, right? So they're like, yeah, it's the exact same network and you have unlimited. So I ended up getting the newest iPhone, like with all those weird cameras, everything unlimited, a much better plan. And I'm spending $18 less a month because I just checked, and it made me check everything else too. Because I thought, you just don't get complacent. Don't get complacent with your bills. Don't get complacent when it comes to your money because you can use it for something else. Brian,
I was going to say, well, actually, Jennifer had a good point on that too. Years ago, we had somebody asking us, what our fees were for a self-directed IRA. And we said, it's about a little under $300 a year for us to hold an asset, receive income, pay bills. And the gentleman at the seminar, so that's $300 is ridiculous. I'm only paying $25 a year on my IRA account at his brokerage firm. And there happened to be a financial advisor in the audience who was also a client of ours and a fan. Said, no, you're paying far more than that on your mutual fund accounts. And he actually went through the gentleman's statement and was able to show him where all these fees were. And it was about $1,000 on a $100,000 account that the gentleman had. But it didn't say fee next to where the money was coming at. It was labeled something else. And so, just again, to illustrate your point, look in and know what all those numbers mean. Don't just look for the simple answer all the time.
Yeah, mutual funds will get you every time. The mutual fund is very interesting how that all goes together. Is now there's a big thing about index funds and stuff like that because the managed ones are, one, they don't actually do better than the actual stock market, and two, you're paying so much in fees for them that you don't even know, and the places don't even have to disclose it either. And that's one of the things you really want to look at too when you're investing in mutual funds is that, what are the costs involved in those things? And they have to publish them, but they don't tell you necessarily where to look.
Absolutely. That's just awareness. That's what we preach, at Advanta too. We try to do a lot of educational events. Mm-hmm. We're just trying to make people aware. I'm not trying to sell, again, that everybody needs to have a self-directed IRA. I'm just trying to make more and more people aware. And I appreciate you letting me come on your podcast to help spread that word of these are other options that you have. Things with your IRA accounts. It may not be for this next investment that you want to use your IRA for, but know that you have that option when you see an investment opportunity come up, that you don't have to pass on it because you don't want to dip into your savings or maybe you don't have the money in the savings account. Your IRA could be a way for you not to miss out on a great investment opportunity.
Yeah,
right.
Absolutely.
And we're talking to Scott Maurer. That's Scott Maurer with AdvantaIRA.com. And we're getting to the end of our segment now. But Brian had one last question.
Yeah, you mentioned events. Why don't you tell us what events you put on and how people can get involved with that?
Yeah, it's you can go to our website, AdvantaIRA.com/events. We do at least usually 3 to 4 webinars a month. We also do live classes in our office in either Tampa or Atlanta, where we have our 2 office locations. But we talk not just about self-directed IRAs. Now, granted, a lot of our educational events are, about private lending in your IRA or real estate in your IRA or the checkbook LLC option inside your IRA account. But we also do bring in a lot of guest speakers. We've brought in attorneys, we've brought in CPAs, real estate professionals, investing gurus, to talk about their area of expertise. Because self-direction, to be honest, it gets boring talking about it 3 to 4 times a month if that's all we were doing. So that's why we want to bring in guest hosts and guest presenters, because our clients want that information. They crave that knowledge of being exposed to something different. So that's why we provide that avenue. So if you go to our website, advantaira.com/events, you'll see everything that's upcoming. You can also click on our YouTube page where we have all of our past webinars that we've done. We record them all, and they're all available for free right on our YouTube page. You can go back and see some of the different speakers that we've had and listen to them and get their expertise.
Yeah, that's great. Yeah, we always are great about, we want more people being educated on what they really have, and then you can make a better choice as well, especially if you're going to do a self-directed IRA, you're going to need to know more than what, just picking a mutual fund out of the air. So definitely great that you guys you're doing education to help people.
Yeah, there's a lot of noise out there on a lot of stuff, and it's great when you have people that are laser focused on cutting through it to get the information so people can become more savvy and happy consumers and use the products correctly the way they need to be used. Nothing's worse than buying something, no matter what it is, any type of service, and you buy it for one thing, and then there's all these features and benefits and no one tells you about it, and you don't use it, and therefore you don't get the full value of what you just paid for. So it's always good if you get that information out. Again, go ahead.
I was going to say, and our education doesn't stop when you become an account holder. We have account managers who use your one point of contact, and they'll help educate you too. I realize, kind of sitting back on our side, it seems to me very easy how to self-direct, and how it makes you just do this and you do that. That's what the rules are. But most people, when they come to us, know the concept, but they need to know those ins and outs, and that's where we try to give as much information and education as possible.
Well, that's awesome. Well, guys, we've been talking to Scott Maurer with AdvantaIRA.com. That's Scott Maurer with AdvantaIRA.com. And it's the end of our show, boo, but we might have him back again. And so, Tammy, take us out.
All right. Yes. Thank you so much again, Scott, for being on today. And thank you, Jennifer and Brian, for hosting. And I will have all of the links to contact Scott in our show notes right below the show right here. So I also will have his contact information if you would like to get a hold of Scott. And if you do want to leave a comment about the show, please email me, Tammy, Tammy, at leafylegalservices.com. You can find us all over wherever you listen to podcasts, iTunes, iHeartRadio, Stitcher, Spotify. We're everywhere. And if you are looking for us on social media, we are at Leafy Legal. So thank you so much again for joining us, and have a wonderful week. Have a great day. Bye-bye.
Attention real estate investors and entrepreneurs. Did you know that real estate investors are a primary target for lawsuits? According to the National Survey of the Court data, 25% of Americans risk being sued in their lifetime. However, if you are a real estate investor, you have a 95% chance of being sued in the next 20 years. Leafy Legal Services helps you protect your assets and strategically grow your business and wealth. Leafy Legal Services are experts at the Series LLC and Delaware Statutory Trust, two of the newest and most ideal legal structures for real estate investors. Leafy Legal Services have the most personalized and affordable solutions for setting up LLCs. Property owners are always at risk when it comes to their assets. Anonymity is so important. If you own just a rental house and you own your home, you have to protect yourself and your properties from any potential legal issues. Leafy Legal Services have the right solutions to make sure you are happy and feel secure. They offer cost-effective documentation that suits their clients' needs. For a free consultation and ebook, visit LeafyLegalServices.com. They are waiting to hear from you. LeafyLegalServices.com.
Follow us on Facebook, Twitter, and Instagram. Don't wait. Take action now. LeafyLegalServices.com. Protect your assets, grow your business, and manage your wealth.